Hello, everyone. I'm so happy to see you again in today's webinar. It's been a while since we last connected, so I truly appreciate you being here. Today, we'll be exploring a topic that we haven't often discussed together, and that is volume in trading. And today, the key concept I'd love to share with you is volume. This is the volume delta chart we often see. When you notice green histogram bars, it means buying pressure is dominating. On the other hand, when red histogram bars appear, selling pressure is taking over. So the big question is, how should we trade based on these signals? Let's say in this case, you keep seeing green histogram bars appearing one after another. That's a clear sign of strong buying pressure. So we should start focusing more on buy orders. And after that, However, in that very same situation, we didn't get any real chance to enter a buy. Right after that, a clear sell signal showed up instead. And it wasn't just one signal, multiple sell signals appeared, highlighted by those bold pink dots on the chart. And after that, and the indicator you just saw is Quantum Vol Delta A indicator that's been researched and upgraded by over 80% compared to earlier versions. It's one of the powerful indicators that helps traders trade more effectively. So now the question is, what makes Quantum Vol Delta truly stand out? First, let's go through the overview to get a clear picture of what this indicator is all about. First, and most importantly, you'll notice the histogram bars that clearly show the buying and selling pressure of each candlestick. But in Quantum Vol Delta, these histograms have been upgraded and refined. They're now split into two distinct components, each revealing a different stream of information. In each histogram bar, you'll notice there are two components. For example, here we have a bullish histogram bar. The first component is what I call the body of the histogram. This represents the delta volume of a candlestick after the indicator has completed its calculations. All right, just keep this in mind because it's super important. It's going to tie directly into the signal mechanism that I'll be showing you in just a bit. Next, the second component you see is what I like to call the shadow of the histogram bar. And through this shadow, you can clearly see how much buying volume a candlestick actually has. In fact, the buying volume is measured from the very bottom of the histogram bar up to its highest point. By splitting the histogram into these two parts, you get a much clearer view of how the buying pressure of a candlestick compares to its own delta. On the other hand, when we look at a bearish histogram bar, it's easy to spot the pink body. This represents the delta volume that the indicator has calculated for that specific candlestick. Whenever the delta volume is negative, the indicator automatically displays the body in pink, making it clear for us to recognize that selling pressure is taking control. Similarly, the second component is the shadow of the histogram bar. By looking at this shadow, you can see just how strong the selling pressure of a candlestick really is. More specifically, the selling volume of that candlestick is measured from the very top of the histogram down to its lowest point. Next, let's look at the following component of the indicator, which is the thresholds. This is the key factor that helps us identify which candlesticks are showing strong buying or selling pressure. First, we've got the positive moderate level. On the chart, you'll see it as a green dashed line. So, what does this line actually mean? Well, it's the very first sign that buying pressure is starting to come into the market. In other words, when the histogram moves above this level, that's when you can clearly notice buyers beginning to show up. Next, just above the positive moderate level, we've got the positive strong level. On the chart, you'll notice it's another green line, positioned higher. So, what does this one tell us? Well, this is the threshold that lets us know whether the buying pressure is really strong or not. Next, you'll see a green shaded area on the chart. That's the average buy volume level, and it shows you whether a candle's buying volume is strong or not. If it goes above this zone, buyers are stronger than average. Next, at the lower part of the chart, you'll notice an orange dashed line, and that's the threshold, negative moderate. If the body of a histogram bar drops down and crosses below this orange line, that's the signal that sellers are starting to step into the market. Next, just below that, you'll find the threshold, negative strong. This level is especially important because it's what quantum vol delta uses to detect when selling pressure is truly strong. Unlike the negative moderate line, this one is drawn thicker and bolder, so it really stands out on the chart. And finally, we also have the average sell volume level, shown as a pink area on the chart. This acts like a benchmark, helping the indicator figure out whether the current selling volume is going above the average or not. In other words, if the sell volume breaks past this pink zone, that's a clear sign sellers are getting more aggressive than usual, and selling pressure might be on the rise. So those are all the key components that make up quantum vol delta. Once you understand each part, you'll have a much clearer idea of how the indicator works and how to use it to read buying and selling pressure more effectively in the market. Next, let's move on to the signal mechanism of quantum vol delta. This is the most exciting part because it shows you exactly when to take action based on what the indicator is telling you. First, we have the strong negative delta signal. On the chart, this shows up as a big, bold pink dot. Whenever you see this dot appear, it's a clear sign that selling pressure is really strong. In simple terms, the sellers are fully in control at that moment. And this becomes an important signal to pay attention to if you're considering sell trades. On the other hand, you'll also notice small, light pink dots appearing on the chart. These are the moderate negative delta signals. What they tell you is that selling pressure is showing up, but it's not as strong as with the strong negative signal. In other words, it's an early sign that sellers are starting to step into the market. Next, we've got the strong positive delta signal. On the chart, this shows up as a bold green dot. Whenever you see this green dot, it's telling you that buying pressure is very strong. And along with that, you'll also notice light blue dots showing up on the chart. These are the moderate positive delta signals. When you see these dots appear on a candle, it means buying pressure is starting to show up. So the question is, when do these signals actually appear? Well, there are two modes that control how the signals show up. First, I'll walk you through the simpler mode so it's easier to understand. The second mode is the automatic signal filtering system of the indicator, and I'll go into detail about that a little later on. First, we have the strong negative delta signal. This is the signal that tells us selling pressure is extremely strong. It will show up on the chart whenever the delta volume of a candle drops and breaks below the negative strong threshold. In simple terms, when that happens, it's a clear indication that the sellers are fully in control of that candle. When this signal shows up, it tells us that the price has a high chance of generating strong downward pressure. In other words, it's often an early warning that the market could be heading into a clear drop. Next, we've got the moderate negative delta signal. This signal tells us that selling pressure has started to show up in the market. You'll see it appear on the chart more often than the strong negative signal, because the condition for it is easier to meet. Specifically, it shows up when the delta volume of a candle drops and goes below the negative moderate threshold. Even though this signal doesn't mean the selling pressure is at its strongest, if you start to see it showing up repeatedly on the chart, that's something you should pay attention to. It tells us that selling pressure is building up, and there's a high chance the market is shaping into a stronger downtrend. Next up is the strong positive delta signal. This one highlights that buying pressure in the market is very strong. You'll see it triggered on the chart once the positive delta volume of a candle breaks above the positive strong threshold. When that happens, it's a strong indication that buyers are taking charge, and the market has the potential to make a powerful upward move. When this signal shows up, it means buying pressure is really strong. As a result, the price has a good chance of climbing higher, driven by the clear strength of the buyers in the market. Next, in a similar way, besides the large green dots that represent strong buying pressure, you'll also notice smaller light blue dots appearing on the chart. These are the moderate positive delta signals, showing that buying pressure is starting to come in. They appear whenever the positive delta volume of a candle crosses the positive moderate threshold. And just like with the selling signals, even though these smaller dots don't represent very strong buying pressure, if they start showing up frequently and consistently, it's a clear sign that buyers are stepping in. When that happens, the likelihood of the uptrend holding steady becomes much higher. So now we've got a better understanding of how the signal mechanism works. But keep in mind, everything we just covered is when the signals are unfiltered. So what happens when the signals are filtered? That's something I'll break down for you in the benefits section, where you'll see exactly what quantum vol delta can really do for you. So now we've got a better understanding of how the signal mechanism works. But keep in mind, everything we just covered is when the signals are unfiltered. So what happens when the signals are filtered? That's something I'll break down for you in the benefits section, where you'll see exactly what quantum vol delta can really do for you. What we can see with the regular volume delta is that the thresholds used to identify delta signals are fixed threshold. In other words, they don't really adjust or change based on what's happening in the market. Meanwhile, in quantum vol delta, the thresholds are dynamic. That means they automatically adjust to the market's movements instead of staying fixed like in the old version. Take a look at the image below. Let's say you're trading during a period when the market has low liquidity. With the traditional volume delta, you'll notice that delta signals show up very rarely. Why? Because when liquidity is low, the delta of each candle is too small to reach the fixed thresholds. As a result, no signals get triggered, and you might end up missing valuable information. In order to catch delta signals during low liquidity phases like this, you'd have to manually adjust the delta thresholds to match the current market conditions. But here's the tricky part. How much should you adjust? For example, in this case, we lowered the delta threshold from 200 down to 70 just to make sure signals would appear. But then, there were way too many signals, too much noise. So we pushed it back up to 100 to get a better balance. And that's the problem with traditional volume delta. You constantly have to keep adjusting these thresholds by hand just to keep up with the market's changes. Now, let's look at the very same situation but with quantum vol delta. In this phase of the market, you'll notice that the thresholds are automatically adjusting in real time to match the market's movements. That means you don't have to keep tweaking anything by hand anymore. All you need to do is focus on picking the right entry point because the signals are already being automatically generated and perfectly aligned with the market conditions. Now, let's look at the very same situation but with quantum vol delta. In this phase of the market, you'll notice that the thresholds are automatically adjusting in real time to match the market's movements. That means you don't have to keep tweaking anything by hand anymore. All you need to do is focus on picking the right entry point because the signals are already being automatically generated and perfectly aligned with the market conditions. Take a close look at the screen. What you're seeing now is the signal from quantum vol delta before it's filtered. And if you notice carefully, there are still some noisy signals mixed in here and there, which makes the chart a bit messy. So now, let's take a look at what happens once the signals are filtered. To turn on the signal filter, there's really just one simple step. Go into the parameters, and then just enable the signal filter option. That's it, quick and easy. And now, let's take another look at the signals from quantum vol delta after the filter has been applied. You'll notice that the signals are much cleaner and easier to read, with almost all of the unnecessary noise removed. So, as you can see, once the filter is applied, it removes a number of weak buy signals that would normally appear against a downtrend. This makes the chart much clearer, allowing you to focus only on the signals that are truly reliable. In the same way, here you can see a bullish phase of rising market. And what you're looking at now are the signals before filtering. You'll notice that there are still quite a few noisy signals mixed in during this uptrend. And now, let's turn on the signal filter, and then take a look at how the chart changes. So what is the mechanism that filters out those noisy signals? Let's dive into the details together. First, we need to focus on the thresholds I explained earlier. Threshold, positive strong, and threshold. Positive moderate when looking for buying pressure signals. And in the same way, pay attention to threshold. Negative strong and threshold. Negative moderate when identifying selling pressure signals. And next, let's focus on the candle colors because once the noise is filtered out, many of those extra signals like the ones you saw earlier will be reduced significantly. And once the noise filter is turned on, for a strong negative delta signal to appear, the indicator will require the following conditions to be met. The first condition is that the delta volume of a candle must drop below the negative moderate threshold. This is the foundation for the indicator to confirm that selling pressure has truly strong. The second condition is that the wick, or the shadow of a histogram bar, must cross the average sell volume level. Next, the indicator will analyze the current candle to determine what candlestick pattern it belongs to. This step is important because the candlestick pattern adds another layer of confirmation to the reliability of the signal. If the candle that appears has a body larger than its wick, for example, reversal candles, Marubozu candles, or any candle that clearly shows strong, decisive selling pressure, then the indicator will suggest a sell signal. This way, the indicator doesn't just rely on delta or volume, but also takes the candle's structure into account to make the signal more reliable. On the other hand, if a bearish candle shows up but it isn't decisive, or if a calculated negative strong signal happens to fall on a green candle, then the indicator will simply not suggest that signal. This prevents misleading situations and helps you avoid getting distracted by unreliable signals. In the same way, even for the moderate negative delta signal, we apply the very same conditions. This ensures that every signal generated is consistent and much more reliable, rather than being based on just a single factor. The first condition is still the same. The candle's delta volume must cross the negative moderate threshold. This is the basic confirmation that selling pressure has truly shown up in the market. And of course, the next condition is that the histogram bar's shadow must cross the pink zone, which represents the average sell volume. This serves as an extra layer of confirmation that selling pressure is indeed present. And finally, the signal candle itself must be a decisive bearish candle, just like the examples I mentioned earlier. Only when this condition is met will the signal be considered valid. Here, you can see that even though this candle meets the conditions for delta volume and strong sell volume, it turns out to be a non-decisive bearish candle. And for that reason, the signal is not suggested. In the same way, when generating strong positive delta signals, the indicator will also follow a few key principles. First, the delta volume of a candle must cross the positive strong threshold. This is the core signal that buying pressure is truly strong and reliable. Second, the shadow of the histogram bar must cross the average buy volume level, which is represented by the green zone. This provides extra confirmation that buying pressure is not only strong in terms of delta, but is also backed by actual buying volume. And finally, just like with sell signals, the indicator will only look for strong and decisive bullish candles, not doji candles or red candles that lack conviction. Because when bullish candles show strong buying pressure and are confirmed by price action, such as Marubozu candles, candles with large bodies, or candles with long lower wicks, they provide an extremely powerful confirmation for the signal. This combination makes the signal much stronger and far more reliable. In the same way, even with moderate positive delta signals, all of the conditions I've just mentioned still need to be met. And as you can see, once the signal filter is activated, each signal has to pass through 3 layers of screening before it shows up on the chart. This means that if you're a trader who really cares about entry points, this feature is extremely valuable. It helps filter out the noise and lets you focus only on the high-quality entries. So, we've now covered almost everything about quantum vol delta. And before we dive into the trading strategy, X3 power for entry signal, allow me just 30 seconds to share a special offer with you. Exclusively for everyone attending this webinar today, the quantum vol delta indicator is available at a massive discount. From the original price of $596, now only $296 stores, that's a full 50% off. This is a rare opportunity to grab a powerful tool at the very best value. And don't forget, stay with us until the end of this webinar because we've got a special free gift from ninza.co waiting just for you. And now, as we continue with today's webinar, we'd like to introduce you to a special trading strategy that can triple the power of your entry points. So, what components make up this strategy? The entire strategy is built around three main elements, and each of them plays a very important role. The first one is Easy Trend, a trend indicator that's incredibly intuitive and simple to use. Think of Easy Trend like a compass that always tells you which direction the market is moving. By using it, you'll avoid one of the most common mistakes traders make: entering trades against the trend. The next component of this strategy is Quantum Vol Delta. This indicator acts as a powerful layer of confirmation for your signal candles. Here's how it works. Whenever a trading signal appears, we don't just jump into the trade right away. Instead, the signal needs to be backed by a strong delta, which confirms that there is real buying or selling pressure driving the move. With this confirmation in place, you'll filter out a lot of false signals and significantly increase the reliability of your entry points. And the final component of this strategy is OSC Turbo. This indicator confirms the market momentum, and when it's combined with Quantum Vol Delta, it creates the perfect synergy to pinpoint the highest quality entry points. So this is where the triple strength comes in. We only take a trade when all three factors are aligned: a clear trend with Easy Trend, momentum confirmed by OSC Turbo, and strong buy-sell pressure validated through Quantum Vol Delta. When these three come together, your entries become extremely solid and highly reliable. And before we move on to the checklist of this strategy, I'd like to take a moment to briefly explain OSC Turbo, because some traders here may not yet be familiar with how its signals actually work. Understanding how each indicator functions within a strategy is crucial. It doesn't just tell you when to take a trade. It also helps you understand why you're taking that trade. And that clarity is what gives you the confidence to execute with conviction. Firstly, you could see this yellow line represents momentum on the smaller time frame, or more precisely, the momentum of the current time frame being displayed on the chart. For example, right now, the chart is set to a 100-tick time frame. That means this yellow plot reflects the momentum on the 100-tick chart. This makes it easy to track short-term momentum shift. Next, I've hidden the yellow line so that you can clearly see a pink block appearing on the chart. This pink block represents the momentum from the higher time frame. With this, it becomes much easier to distinguish between the momentum of the current time frame and that of the higher time frame. The pink block on the chart represents the momentum of the higher time frame. When this pink block expands, it indicates that the higher time frame momentum is moving into the overbought zone. Conversely, when the pink block stops or disappears, it signals that the higher time frame momentum has exited the overbought zone. With this clear visual representation, we can easily identify the state of the market on the higher time frame without constantly switching between different charts. This is one of the key strengths that makes OSC Turbo stand out compared to traditional indicators. In the same way, when you see blue blocks appearing on the chart, they also represent the momentum of the higher time frame. When these blue blocks show up at the bottom, it indicates that the higher time frame momentum is moving into the oversold zone. And finally, OSC Turbo provides us with two types of trading signals. The first one being the push signal. Before diving into the full mechanism, let me give you a quick idea. This signal behaves much like the magnetic principle where like poles repel each other. In other words, when momentum on both the higher time frame and the lower time frame align in a similar state, they generate a repelling force that often leads the market to reverse direction. This is the foundation of the push signal. Next, we have the second type of signal, the pull signal. While the push signal is based on the principle that like poles repel each other, the pull signal follows the opposite rule. Opposite poles attract. In simple terms, When momentum on the higher time frame and the lower time frame are not aligned, but instead move in opposite states, they create an attractive force, which generates the pull signal. This type of signal helps traders identify moments when the market is more likely to continue in its current direction rather than reverse. Next, let's dive deeper into the signal mechanism of magnet OSC Turbo. This is the key part where you'll see exactly how the indicator generates the push and pull signals and why they matter when it comes to making trading decisions. First, let's take a closer look at the push signal. As you already know, this signal is generated when momentum on both time frames, the current time frame and the higher time frame, simultaneously enters either the overbought or the oversold zone. However, the real upgrade that Magnet OSC Turbo brings is that it doesn't just rely on both time frames entering the overbought or oversold zones. Instead, it's designed with an advanced algorithm that also analyzes the momentum of individual candles. Through this process, the system can identify the candles with the high level of reliability, and it's based on these candles that the push signal is generated. This means the signal is not only supported by multi-timeframe alignment, but also reinforced by actual price action, giving it greater accuracy and effectiveness in trading. Conversely, when momentum from both time frames simultaneously enters the overbought zone, the indicator starts looking for signs of a potential downside reversal. By analyzing momentum and the reliability of specific candles, the system then identifies the right moment to suggest a sell signal. This means that instead of simply reacting to the market being overbought, Magnet OSC Turbo filters and pinpoints more reliable entry points, increasing the likelihood of success when trading based on a sell signal. Between the two signals, push and pull, the push signal is more suitable for traders who aim for higher rewards and prefer to trade at major market reversal points. This type of signal offers larger profit potential, but it also requires patience and solid risk management skills. On the other hand, the push signal isn't the best fit for traders who follow a scalping style. Scalpers usually prioritize speed, consistency, and taking many smaller trades, rather than waiting for big reversal setups like those highlighted by the push signal. Let's talk a bit more about the push signal. In this example, you can clearly see that even though momentum on both time frames had already entered the overbought zone, the indicator did not immediately generate a trading signal. That's because the system hadn't yet identified a high reliability candle to confirm the setup. It was only when momentum on both time frames once again moved into the overbought zone and the indicator detected a reliable candle that the push signal was officially formed. Thanks to this mechanism, the signals are not only based on market conditions, but also reinforced by price action confirmation, which helps filter out noise and increase accuracy in trading. In another example, the mechanism works the same way, but this time the market remained in the overbought zone for a longer period. Even though both time frames had already signaled overbought conditions, the indicator didn't rush to generate a signal. Instead, it waited until a reliable candle appeared, and only then did the push signal form. This prevents traders from entering too early while the uptrend is still strong, allowing them to act only once a more dependable signal is confirmed. Next, let's move on to the pull signal. In this example, when the lower time frame enters the oversold zone, while the higher time frame is moving into the overbought zone, the indicator begins to look for a buy signal. Why is that? As we know, when momentum reaches the overbought zone, the price doesn't always drop right away. There are times when the price continues to rally strongly, showing that bullish momentum is being sustained at a very strong level. So, when the higher time frame still shows strong upward momentum, and at the same time the lower time frame dips into oversold, this creates an opportunity to take advantage of the imbalance. Once the lower time frame momentum starts to move out of the oversold zone, a pull signal is formed, indicating that the market is likely to continue its upward trend. Similarly, in this case, we observe the same type of situation. The higher time frame momentum is in the overbought zone, while the lower time frame momentum is in the oversold zone. When this kind of imbalance occurs, the momentum of the lower time frame tends to be pulled in the direction of the higher time frame, which in this case means to the upside. As a result, the indicator generates a bullish pull signal, suggesting that the market is likely to continue moving upward under the influence of the dominant higher time frame momentum. So, I've just given you a quick overview of the signal mechanism and a basic introduction to the Magnet OSC Turbo indicator. The idea here is to give you a clearer picture of how it works before we bring it into the complete strategy. Next, I'm going to show you how to set up these indicators on your chart in a way that's clean, organized, and comfortable to work with. First, let's add the easy trend indicator to the chart. Since our main purpose here is just to identify the trend, we'll turn off the unnecessary elements. At this point, I'll go really slowly so you can see it clearly. The first thing we'll do is turn off the background color and the candle colors, so the chart looks cleaner and much easier to follow. Next, we'll turn off the trend and pullback signals from the indicator. Since in this strategy we only need to see the overall trend, removing these extra details keeps the chart simple and much easier to read. And finally, I'll make a few adjustments to the thickness and style of the trend plot. And that's it. We finished setting up Easy Trend. Pretty simple, right? When the market is in an uptrend, the plot line turns blue. And when a downtrend takes place, it switches to red. Clear and easy to follow, isn't it? Next, we'll add the Magnet OSC Turbo indicator to the chart. At this stage, you don't need to make any adjustments to the appearance. What really matters is finding and applying the right settings so the indicator works in the best way for this strategy. And finally, we'll add quantum vol delta to the chart. Just like with Magnet OSC Turbo, there's no need to adjust the appearance. All you need to do is select the right settings. And if you run into any difficulties while setting it up, don't worry, simply reach out to us at support@ninza.co. And just like that, we've successfully set up the entire strategy on the chart. Now it's time to move on to the trading checklist, and I promise, it's super simple and not complicated at all. To help you grasp the checklist as quickly as possible, we'll jump straight into a live demo trade. With this example, you'll immediately see how the checklist works in action. The very first factor we need to pay attention to is the trend. Take a look at the chart. Right now, the market is in an uptrend, and you can clearly see this through the trend plot from Easy Trend. Next, this is the moment where we're going to wait for a buy signal. If you take a closer look at the chart, you'll notice a candle forming that suggests buying pressure is starting to show up. At first glance, this may look like an opportunity, but I want to emphasize, you shouldn't rush into a trade just yet. Acting too quickly could easily put you in a position where the price turns against you right after you enter. What really matters here is waiting for confirmation. This is where Magnet OSC Turbo comes into play. Once this indicator confirms that bullish momentum has truly developed, you have a much stronger case for your trade. And when the uptrend is already clear, momentum has been validated, and buying pressure is clearly visible on the candle, that's when you can confidently step in with a buy order. That's what makes it a high quality entry, not just a guess based on a single signal. Here's an important note. We only want to enter trades when the price is close to the trend plot. This gives you a much better, more optimized entry position. On the other hand, if you jump into a buy when the price is already far above the trend plot, the risk is higher and the entry won't be as strong. And right here, once all the conditions have lined up, we go ahead and take the buy trade. To make it easier for you to see, I'll go ahead and change the signal colors. I'll set the buy signal to white and the sell signal to yellow. This way, the signals stand out more clearly, and there's no confusion when we're watching the chart. Next, right here we can see that Magnet OSC Turbo has already given us a signal. But according to our checklist, we don't jump into a trade just yet. What we really need is a confirmation from Quantum Vol Delta, and that should happen within the next 2 to 3 candles. That's when we know for sure that buying pressure has actually kicked in. Now, keep this in mind. If we don't see a Quantum Vol Delta signal within those 2 to 3 candles, or if it shows up way too late, then we'll simply skip the trade. Because at that point, the reliability of the setup has already dropped. And right here, with both signals lining up, we go ahead and execute a buy trade. Next, we can see that the trend has shifted into a downtrend. At this point, Easy Trend has also turned red, giving us a clear signal that the sellers are now in control of the market. And right after that, once Magnet OSC Turbo gives us the confirmation, we now have everything we need to act. This is the key moment where all 3 factors come together. The downtrend is crystal clear, strong selling pressure has shown up, and bearish momentum is fully confirmed. With all of these aligned, we can confidently execute a sell trade right here. This entry isn't just obvious, it's also far more reliable compared to jumping in early on a single hint. Notice how when we wait for the right conditions to line up, the market often responds decisively. Once the sell trade is triggered, the price starts moving sharply in the downward direction, showing us that we entered at a strong position, fully in sync with the main flow of the market instead of fighting against it. Next, we'll continue to wait for another sell setup. At this point, you can already see that Magnet OSC Turbo has given us a bearish momentum signal. So now, the only piece missing is confirmation from Quantum Vol Delta, showing that real selling pressure has stepped in. Once that negative delta signal appears, that's when we can confidently execute a sell trade. By patiently waiting for both signals to align, we avoid getting caught in noise and make sure our entry is backed by the highest level of reliability. Let me share a little tip to trade more effectively. Pay close attention to the negative delta signals. If you notice that during a downtrend, these signals are showing up frequently and clearly outnumbering the positive delta signals, that's a strong indication that the sellers are firmly in control of the market. When you see that, you can confidently hold on to your sell trade longer instead of exiting too early. This way, you ride the trend properly and give yourself the chance to maximize your profits. So by now, you can see exactly how we trade using this strategy, right? It's simple, straightforward, and very practical. And to make it even clearer, let's go ahead and take a few more trades together using this checklist, so you can really see how it plays out in action. Right here, we've just received a buy signal from Magnet OSC Turbo. What's really interesting is that just before this signal, we had two consecutive candles showing strong buying pressure. Together, these factors paint a very clear picture. The uptrend is still intact, momentum has kicked in, and buying pressure is supporting the move. This is a perfect example of how the elements in our checklist align to give us a high-quality entry point. Just like in the previous example, here we also have a buy trade once all the conditions are in place. Buying pressure is clearly showing up. And at the same time, we've got the buy signal from Magnet OSC Turbo. Once again, this combination gives us a solid and reliable entry point. Next, let me share with you a simple but powerful trading tip that will help you feel more confident in your decisions. Always pay close attention to buying or selling pressure right before a potential trend reversal. For example, here we can clearly see that strong selling pressure appeared just before the trend was about to turn. That gives us an extra layer of confirmation. So when a sell signal shows up together with that selling pressure, we can enter the trade with confidence without fear or hesitation of being caught in noise. Next, here's an important tip when it comes to managing your trades. If you've already taken one or two trades at the start of a trend, and then you notice a third sell signal appearing, you'll want to be cautious. From the fourth sell signal onward, it's usually better to avoid taking new entries. That's because by this stage, the trend may have already run quite far, and the risk of a reversal is much higher. Limiting the number of trades within the same trend helps you lock in profits safely and avoid getting caught if the market starts to pull back. Here's another powerful tip. Trail your stop using delta signals. For example, let's say we have a buy trade here. The price starts moving up, and we see candles forming with strong buying pressure. In this case, you can move your stop just below those candles. Why? Because those candles act like support candles, confirming that real buying pressure is in place. If the price later comes back down and breaks through them, it's a strong sign the market may be about to reverse. This way, you're not only protecting your profits, but also managing your risk much more effectively. So, we've now gone through just about everything about quantum vol delta and how to combine it into a powerful trading strategy. I truly hope today's session has been valuable for you, and that it helps you trade with more clarity and confidence moving forward. Before we move on to the free gift, let me share with you a super value deal that comes with two exciting options. Option 1, for just $546, you'll get instant access to the full package of 3 powerful indicators: Magnet OSC Turbo, Quantum Vol Delta, and Easy Trend. This is a special discounted price available only during today's webinar. Option 2, at $646, you'll receive the same 3 indicators plus an extra bonus, a $400 voucher to use on other products at ninza.co. Please note that the voucher applies to the original price. Both options are fantastic, and remember, this exclusive deal is available only during this webinar. Or, if you'd prefer to get just the Quantum Vol Delta indicator on its own, no worries. You can also take advantage of a special discount available exclusively during this webinar. It's the perfect way to experience the full power of quantum vol delta without committing to the entire package. And with that, we come to the end of today's webinar. If you don't yet own these indicators, simply scan the code below to bring them into your trading toolkit. Thank you so much for joining us today. And once again, a heartfelt thank you to all of you for being here with us today. Wishing you continued success and effective, confident trading in the markets. We look forward to seeing you again in our upcoming webinars, where we'll share even more insights and strategies